warahmatullahi wabarakatuh. Bismillah ar-Rahman ar-Rahim. Jazakallah for all that have joined. As part of our Santa Jara 2025 action plan, we have designed weekly talks to educate, inspire, motivate our members. We have four strategic pillars: enlightenment, where we will go through Islamic finance, commerce, and investments; empowerment, where we will focus on skills development and vocational training; employment, where we focus on careers fairs and job assistance; and entrepreneurship, where we will focus on business guidance and mentorship. We want the Center of the Jar team to be accessible to you all, and this is our commitment to you. We'd like to help as many people as we can with the personal and professional development. So I'll just introduce the talk today, which is on the pillar of entrepreneurship. There will be roughly a 30-minute presentation, and then there will be some time for questions at the end. There will also be a poll, which will be released in your sort of Zoom. And please do provide your feedback, as this helps us improve the talks and helps us engage further with what is really requested from the audience. So without further ado, I'll introduce our esteemed guest today, Syed Imtiaz Ahmed Saib. He's the MD and CEO of SI Ahmed & Co. Imtiaz Saib is a fellow of the Association of International Accountants. He founded this in 1999 after training with Chantre Vellacott. Over 4 decades, he has guided entrepreneurs from first invoice to scale up, with clients becoming leaders in their fields. He's known for his plain English guidance on cash flow, tax efficiency, and growth discipline. He'll share some valuable insights today on starting and structuring your business, managing cash flow and tax efficiency, and building for long-term success. I just want to let the audience know that, this is the first of many talks, inshallah, within sort of the entrepreneurship strategic pillar. So if we can just try and keep the questions in line with what sort of is being discussed today, whilst it's a huge topic, and I'm sure there'll be many questions, if we can keep them in line with what Imtiaz Saib is discussing with us today, and I'm sure he'll share some real key insight for us today. So I'll pass over to yourself, Imtiaz Saib. Just some quick house rules. If everyone can keep their cameras generally off, and keep yourselves on mute, please. And if you do have any questions, please, put your questions into the chat, and we'll try and cover as many as we can in the time that we have permitted. Jazakallah, and over to you, Imtiaz Saib.
Jazakallah Shamsab, thank you for that very kind introduction, and Jazakallah to everyone who has joined today. Thank you so much. So, as mentioned, this is quite a vast topic, and in the short time allowed, we'll try and cover as many aspects as possible. I may not necessarily go in the order that's needed in terms of setting up a business, but I'm starting at a point where you've basically done your due diligence, you've done your market research, and you're ready to launch a product. We'll try and cover market research a little bit later on, and also some of the causes for business failures and how to prevent this, and also some aspects of growth, as Shamsab has said. But so the first point I'd like to begin with is once you've decided on your product, you will then need to decide what sort of business entity to use in order to register your business. So there are several aspects to this, several forms of entity, but I will just stick for the purpose of this session just to the 3 most common ones, which is sole trader partnership or limited liability company. I think these are the most topical ones, which most new entrepreneurs will end up using. We'll just very quickly go through the pros and cons of each, discuss some of the tax and liability implications, and then go straight into the registration process. So the first is a sole trader. This is the simplest form of entity to use. I think most members who initially register as sole traders, and then perhaps move on to limited companies, etc. later on. But very simple to set up, very low admin costs. You simply register with HMRC. You keep your accounting and bookkeeping records. You file one self-assessment return in the year. No company's house filing, and very straightforward. Here, the business is registered in the name of the individual as a sole trader. You may have a separate business name or you may not, but it is actually, the point to remember is that it's an individual who's registering with HMRC to become a sole trader. The other simple factor is that the taxable income ties up with the normal tax year. So tax year in the UK, as everyone knows, is from 6th of April to 5th of April every year. So again, your taxable period now under the new basis period reform rules is now going to be tying up with this. So you get assessed on your profits and losses that fall within the tax year. So again, simplicity is the key. Flexible uses of profits and losses, which mainly with regard to the losses, if you do make losses, you can offset these against your other income in the year, or you can carry forward losses. But we don't need to go into that too much. But just there's a lot of flexibility again. No dividend rules as with limited companies. IR35. This is more for personal service companies with individual contractors. There's some issues, some tax, some anti-avoidance tax rules which HMRC has put in, but this doesn't apply to limited companies. Again, don't worry too much about that at the moment. Some of the disadvantages is that as a sole trader, you will have unlimited personal liability for business debts and claims from third parties. So one thing to be aware of. Then also your tax and national insurance contributions can be higher as your profits start to increase. So this is where limited companies do tend to attract more tax advantages. And also just to bear in mind that we are now in making tax digital era. So from 6th of April 26, many sole traders will now have to keep digital records and send quarterly updates once the income thresholds are met. And this is, at the moment, this is set at £50,000 profit from total income. And but those thresholds will start coming down in due course. The next form is partnerships. Partnerships are similar to sole traders, assessed under income tax rules, but profits and losses are shared equally between the partners in the agreed profit sharing ratios, whatever is in the partnership agreement. Similarly, liabilities of the business was going to be shared between the partners equally. There's also an additional step in that you need to have a partnership name, and that partnership has to be registered with HMRC in addition to the individual partners. So you'll have a separate partnership tax reference number in addition to the individual partners. And so the partnership return, an additional partnership return will need to be filed every year, in addition to the income tax returns of the individual partners. Next, we have the limited liability company. Here, a company name is chosen and registered for tax purposes. So here, the distinction is that the limited, it's the company that's registered for tax purposes and not the individual. The company will have officers who will run the company, who are the directors of the company, and shareholders who will own the company. In the bigger organizations, there's often a divorce between ownership and control, where directors control the companies and make executive decisions, and the shareholders own the company. But as small businesses, new startups, the directors and shareholders tend to be the same people. Limited liability, this is one of the main advantages, is that generally because the company is a separate legal entity in its own right, it is responsible for the business debts. So the owner's personal assets are better protected, providing things are run properly. So one major advantage. There are potential tax advantages, as mentioned earlier, for having the company as the profits start to rise. Marginal rates of tax for limited companies are considerably lower than for individuals. And providing you don't have to keep drawing money out of the company, then you can take advantage of these lower corporation tax rates. Employer pension contributions also can be made from limited companies to help reduce the corporate profits. And there also tends to be perceived credibility from suppliers and from funders, financial institutes. Some insist that you have limited companies before they will fund you. Some of the disadvantages is that there's more compliance and visibility. The statutory accounts are more involved in filing. Annual returns need to be filed every year. Additional costs for that. Visibility as well, because the companies are registered at Companies House. All your data is in the public domain. Anyone can just do a search in your name and see which companies you're in, or they can do a full investigation into your company and see all the file documents and do their own analysis on that. So again, visibility is something which some people, if they want privacy, this may not be for them. Obviously, more admin costs to run as well. As mentioned, there'll be some cash extraction taxes. If you're a director in the company, and if you need to take money out, then there's a taxable event potentially every time. I won't go into that too much, but normally individuals take out money from companies via a combination of salaries and dividends. Salary is obviously, just as per the payroll, but also the dividends are a share of profits, but these dividends will need to go on to be declared on your income tax returns. So what you don't want is a situation where you take too much money out, so you're paying corporation taxes, but then also high income taxes as well. You don't want to go too much onto the taxation side of things at the moment, but just bear in mind that that is an issue which you will have with limited companies if you need to draw out lots and lots of cash regularly. IR35 exposure, again, this is more for personal service companies, contractors. And also there's often a taxable event when you want to close the company and wind it up. So you need to have some special exit planning and plan properly. So generally more restrictions, potential tax advantages, but more admin and more restrictions and a lot of visibility in the public domain. So normally I would say as a guide, if you have lower profit, in order to decide which of the three different entities to use, if you have lower profits or you need to take out lots of cash personally, you need to, whatever you earn, you need to take out. Sole trader stays simple and it's more cost effective. If you have higher profits or you can afford to leave profits in the business so you don't have to keep taking cash out, a company can be more efficient because you can control this salary dividend mix and you don't necessarily have to take the money out. If you don't take money out, then you don't get taxed on it. So it just gives you that flexibility, that choice to leave money in and let it grow in the company. Sometimes in the client contractor world, again, you may be forced into having a limited company. Some of your end clients might push you to engage through a limited company. These again are more for contractors, for personal service companies, as we say. So you may be forced down that route, but again, you need to weigh up the IR35 risks. And generally, the risk profile should be considered if you have a lot of commercial risk or if you have employees. Then limited liability is often worth the extra admin cost to keep. So once you've decided on which source to use, you need to register that particular entity with HMRC and Companies House. You need to set up a business bank account. Business insurances, you must make sure you have the correct business insurance, in particular public liability insurance. If you're dealing with the public, you have premises where people come onto your premises, you must make sure you have public liability in place. Employers' liability also if you have staff and you're hiring. Again, these are additional compulsory insurances you must have. And then also be mindful of whichever trade you're in. there'll be different licenses and permits that you need for these as well. Swiftly moving on. So I'm just going to go into the procedure for registering the entity. So let's say if you've decided on self-employment, again, you need to register with HMRC. Very simple process. Please refer to www.gov.uk. Here you will find that a lot of the information is there. It's very easy to register. Simply type in registering for self-employment or starting my business and just follow through the step-by-step instructions. Most people who will have a little bit of computer literacy, they'll be able to do this quite easily. Essentially, you're creating a government gateway account, which this gives you access to HMRC's online services. You fill out the registration form online, you put in your personal details, your national insurance numbers, where you live, your trading addresses, you'll upload ID docs, etc. And then eventually you'll submit the form. Once the form is submitted, this could be done online or it can be sent by post, whatever. But eventually you'll have a unique tax reference number, a UTR number as we call it. It's a 10-digit number which will be issued by HMRC. Keep this safe. This will be used for all filing of your income tax returns in the future while you're self-employed or while you have untaxed income. And once you have that 10 digits reference number, that's evidence that you've registered yourself as self-employment, as self-employed. So again, a relatively straightforward procedure. But again, if you have contacted an accountant at an early age, then I'm sure he'll be able to do this at no additional cost to yourself. So it's worth the investment in the early stages. Next, if you're registering with for a limited company, slightly different procedure, but you're following the same guidelines. Again, you can go directly onto gov.uk. If you just do /set up limited company, you'll find that you'll just be guided through the same procedure again. There is a fee involved around £50 for the which is payable to Companies House at the time of setting up the company. You'll need to search for your company name on that same site. You'll be told if the name that you have, if it's available. So if there's a name that's already there, you won't be able to use that name. You have to apply for a different name. Once the name is clear, again, this is all done through this same website and from this link. Again, you'll be asked to set up your government gateway account, and this will be set up now in the name of the company. The details of the directors, shareholders will be entered, registered office, etc. Again, you'll be asked to upload your ID documents. From next month, from November, this will be compulsory. I think right now you can get away with not uploading the ID documents at the moment, but from next month this will be compulsory, and a special code will be issued once your ID has been verified. This is all due to the anti-money laundering guidelines. So again, you can do it yourself, pay £50 fee, and the company will be set up for you. You can use various company formation agents, solicitors. There's so many out there. Their fees tend to be between £75 to £200. Your accountant may also do this, but again, he'll charge a fee for you. Eventually, the company will issue, once the company is formed and it's registered, then you'll get a certificate of incorporation with the company registration number on. This certificate should then be used to open up a business bank account for the company, and then eventually the company will receive a unique corporation tax reference number, similar to individuals receiving theirs. You have a corporate UTR number, and again, very important to keep this safe. So you'll be needing this to file your future documents as well. So once the company is formed or you're registered for self-employment or partnership, next thing that's very important is to separate your business and personal expenses in order to keep your record keeping accurate for HMRC purposes. Sort of go onto any of the bank sites. There is these days a choice between digital banks or traditional high street banks. Certainly the digital banks are becoming very popular these days, mainly because of convenience. They're very easy to set up. You can just go online. Some of these are, for example, Tide, Starling, Monzo. You get Cash Plus. Often these are banks which are online. They don't have a physical presence on a high street, but very convenient. Fees are very low compared to the traditional high street banks. The service ranges, service and customer support perhaps are better with the traditional high street banks. Cash handling, if you need to deal in cash and checks, probably best to go with the traditional banks. Innovation and tools, a lot of the digital banks, they have quite a few quirky little bits where you can set up saving pots, and you can they also help you to analyze out your expenses and break it down into different headings so they can be imported onto various software to help produce accounts. So they're quite good with those. Some of the traditional banks are as well, but there's a longer procedure. If you're looking more for trust and longevity, then traditional high street banks probably, hit the edge on those. The required documentation for both will be your typical anti-money laundering docs, like your passport, your driving license, your proof of residence, and sometimes they'll ask to see some evidence of business activity. But again, with the digital banks normally set up within 24 to 48 hours, traditional banks can take a little bit longer, possibly up to a couple of weeks sometimes. But in practice, as a guide for individuals with small online businesses and digital banks like Starling and Monzo or Revolut are efficient, low cost, perfect for managing day-to-day money. But for larger firms or those perhaps needing loans, overdrafts, or in-person banking, perhaps a traditional bank account will be more suitable. But entirely your choice, whichever one you choose, just make sure that you keep your business and personal expenses separate. Just going to quickly cover understanding your taxes, your accounting and tax obligations. As a self-employed entrepreneur or as a corporate entity, you'll be having to pay several taxes in the UK. Obvious one is income tax. This rises from 20% to 45%, depending on your level of income. You'll be filing self-assessment tax returns every year. Be mindful of these. Corporation taxes for corporate entities, these vary between 19% up to 50,000, then gradually they rise up to 25%. Over 250,000, these will come in at 25%. So again, the corporate account, these taxes are normally paid 9 months after the year end. Again, don't want to go too much into the taxation side, but these are the various taxes you must be aware of. VAT, if you have a taxable supply, then normally you're paying 20% VAT on that. So you must register as soon as you cross the threshold. You must register. Typically, at the moment, £90,000. Excuse me, £90,000 a year is the registration limit at the moment. Also be aware of payroll taxes as well. If you're hiring employees, then you must register for PAYE, and then all the other ramifications that come with that. With your employees, you need to provide them, those who qualify with the auto-enrollment pensions, and various other aspects, the regular filing to HMRC of the pay slips and the payroll is important. There are strict filing deadlines and punitive late payment penalties, so be aware of these. Again, take professional advice on this, be compliant. It is very important that we're all up to date with taxes and we're paying the right amount of tax. Making tax digital, as mentioned earlier, this is something else which is now coming in. So you've got to make sure that you're compliant with your bookkeeping from the start. And there's various software out there that needs to be used. HMRC will only allow you to file if you're using proper HMRC approved MTD software. So the days of just keeping, manual records is now being restricted quite severely. I'm just very conscious of time. So I just wanted to quickly cover also some of the top causes of new business failures in the UK. From the data from the Office for National Statistics, we show that since 2017, 60% of businesses have ceased trading within 5 years, and 20% fail in the first year, and 60% fail within the first 3 years. So, we just, some of the causes of these is important to know. The topmost being cash flow, working capital. So this is obviously if the funds aren't in place or if you don't have sufficient reserves, then the business is unable to operate. UK specific nuance is that a large share of small businesses, this is the main fall for the main failure for most businesses not having enough cash flow. Then next is the demand, the product market fit. So obviously this is where the customer, the product hasn't been validated, enough market research hasn't been done. So important to get this done at the right time. At the start, business model issues you can have. There can be demand, there can be the revenues there, but unfortunately the costs are too high. So this is again for new businesses in particular. This is where they've underestimated the overheads and the costs. Then also you can have managerial issues where the product is fine, everything is good, but unfortunately the owners of the business, it's often founder-led, so they have limited business management capabilities. So they're not working with the right team. And obviously external pressures, the macro shocks, rising costs, regulatory change, inflation, etc. And also not enough marketing. You can have a good product, but nobody knows about it. So again, marketing is very important. Often new startups have limited budgets again, so the marketing budgets are often quite low. So this is just to give you an idea of some of the main causes of new business failure at the moment. So again, the most important thing, planning your finances right at the start before you even set up. You must know your typical startup costs, equipment, website, professional fees, office space. Whichever business you want to go into, you must do the due diligence correctly. Forecasting cash flow is one of the most important things, so that you do this at the start so you know you're not going to run out of money early. It's important. We always tell our clients that they should do their forecasting for new businesses, especially they should do it on a quarterly basis. Every 3 months, they should prepare forecasts, check the forecast results to actual, look into the deviations, and then keep reforecasting if necessary. Important to have at least 3 to 6 months of cash reserves of funding in place. This is more for trading entities. Obviously, if you're doing a service-based industry, it's slightly different. This is something that's most important, as we've seen from before, from the top causes. Not having enough funds in place is one of the major causes of failure for businesses. Also, break-even analysis, know what minimum sales you need. This is where you need to keep reassessing this, just to see what sales you need in order to cover your costs regularly. And obviously, you get professional assistance at all times. I've often, just talked about a tick spot, a sort of control checklist to help manage business failure, which, especially for new businesses, we like to discuss, talk about, and hand out to them. The first thing is, again, maintaining a 13-week rolling cash forecast, again, a quarterly forecast, as mentioned before. Keep a check on the debtors, the people who owe you money. Often this is a big problem with new businesses. They're out to get customers and to please the customers. They'll let them take time to pay, but this can be very damaging in the long term, especially with new businesses. So keep a track of that. Don't let your debtors build up. Stress test the pricing and margins for cost increases. This is important. this is like a, a what if analysis. If costs go up so much, then obviously how much you need to do your prices, which you need increase pricing for. Continually review and cap overheads and fixed costs, perform quarterly break-even analysis, validate the market. This is the market research aspect. So again, this is like a checklist which which is extremely important that for new businesses you look into. Shamsab, how are we doing for time? Are we okay? I still have a few minutes. Okay. So next, so in addition to, so just to help again with the financing side, I won't go into this too much, but there are several free government grants and loans available out there. The British Business Bank is one of these. This scheme, it offers £25,000 per founder with mentoring support. The interest rates are relatively low, but it is something that that can help. Obviously, loans should be used very wisely, so don't take out loans if you can't pay. But these are some, some available, which can certainly help with the startups. Innovate UK. This is very good for innovation-based ideas. Various local enterprise partnerships and growth hubs. These are more related to the region-specific supports, but do go on to the Government UK Business and Finance Support website, and there'll be quite a lot there that you can look into. I'll leave this for the time being, and also just very quickly, I'll just cover some aspects of growth in the UK, just some practical strategies. We have a few minutes before we close. Is that okay, Shamsab? We'll just quickly cover this area.
Yeah.
Okay, so I think the first thing that certainly that we've used ourselves within my own practice, and it seems to be quite relevant now. The first thing is you need to be able to have it's important to have a strong local presence. You need to be found locally for new businesses in particular. So please do make full use of your Google business profile, fully optimize it, add photos, post updates and services on your website. Maximize your local search engine optimization with keywords like, I don't know, we use accountants in Walsall. You can have doctors in GPs in Hampstead, electricians in Brighton, whatever, but do maximize that as much as possible. Also add your name to the various, the trade manuals, the Yale, Bing Places, Free Index, also Trustpilot if it's relevant. But to do make your local presence valuable, sort of visible. Referral systems as well. We've grown a lot from referrals. We tend to find, especially with service-based businesses, referrals are the key. So do ask for referrals when you have your customers, ask them to refer you to others. Also important to partner with related businesses. Again, I can speak from my own example that as accountants, we partner up with a lot of solicitors, mortgage brokers, IFAs, and we're often cross-referring. This is a very strong strategy, and this can really double your business quite comfortably. And also reward your referrals as well. Even just if you give some commission for referring businesses, this tends to work quite well also. The idea is to build trust with content as well. This is another aspect which we've used a lot before. This is just like, for example, creating short educational videos, which, just something in your line of business, maybe, again, electricians, what hazards to avoid. Just a simple short video, 30 seconds. And these, especially nowadays with TikTok and all of these Instagram, whatever, this wasn't around 20 odd years ago when we started, but there's a lot of things you can do now to build trust with your customers. You can do guides and sort of templates. You can publish case studies, before and after scenarios where you've helped someone out. So these again, very strong tools used before and quite prevalent now as well. Networking matters as well. Do get involved with your local business networks, your chamber of commerce's, local meetups. You'll find that often get invited to various seminars and events. To talk, take this up. The whole idea is to build up your content. Nowadays, you have things online like LinkedIn, etc., which is very good. But networking is extremely important. We've talked about cash flow already. And the other thing I'd say is that, sorry, I'm rushing through this, but simple systems win. It's important to have lots of simple systems in place. If you want to scale your business, this is extremely important. So there are CRMs, there's some very good CRM for leads like HubSpot. Workflow management is important when you're just, so you have a schedule, at any time what work is outstanding, what customers you're working on, etc. And also onboarding as well, so proper documented onboarding processes. So just a quick summary of growth strategy, Google's business and local search engine optimization. These are free costs, quite, quite good, quick to implement, and you get very high quality leads. Referral and partnership strategy. Again, this is free. You get fast implementation and works exceptionally well, especially in the service business. Short educational videos. Again, just a summary of what we've just discussed. But again, the importance of having lots of systems in place to help scale your business further. So just a quick recap now. Do plan properly, register correctly, keep accurate books and records, and submit timely returns. Be compliant, budget and finance regularly and correctly, market effectively, get professional support, and ultimately and most importantly, lots of sadaqah and prayers. You are all Ahmadi Muslims, you are the followers of the Imam Mahdi of the time, and you should be fully confident and inshallah very eager to set up businesses. This is what beloved Azur has encouraged as well. For people to get into business and set up your businesses. And inshallah, I'm sure you'll do very well. So, Shamsab, I think I may have gone over the limits. I do apologize, but I'll conclude at this point.
No, that's okay, Jazakallah. I think very insightful and important information delivered there. Just to let the audience know as well, the listeners know that there is the poll that I have released it slightly early, so apologies, but it is there. If everyone can please take the survey and come back with your feedback. We do have a few questions, so I'll get through a few of those. I think the first one, I guess, is a pretty good question actually. How do some limited companies use the correspondence address as company's house, PO box? Is it a paid or free service? But I guess leading on from that is quite an important question, that when you are setting up a business, what address should you be using? I guess the go-to probably is if you're setting up as a first time sort of smaller business, maybe to just give your home address. But sort of what is your guidance around that, as well as the question around how do people use, is there some sort of free company's house service?
Okay, there isn't a free service as such, Shamsa, but there are several of these mailbox addresses. These various companies, they specialize in this. It's often the company formation agents. I know a company which probably most of people have heard, Companies Made Simple. They offer this registered office service. You can have your home address, but the only thing is, again, just remember that anything on Companies House is available for public display. So a lot of people, by choice, they don't want to display their home address for whatever reason. You can understand the privacy aspect. Accountants also tend to, give their addresses, although this is normally discouraged by the professional bodies now as well. So there's no, in answer to the question, there's no harm in having a PO box address, but just be careful that there's a lot of, wherever the registered office is, that's where all the confidential documents will be going. So, and very important documents like the UTR numbers, authentication codes, etc. So yes, you can use them, but so long as you have a reliable place where there's a good forwarding address, basically, so you can get access to the post.
Yep. Another question that we have is, I guess the general question here would be, what sort of banks would you recommend for sort of startups? There are some of these sort of smaller, new techie type banks now which offer sort of quite a fast service, fast opening accounts. And would you have any recommendations? But also, I guess the question more specifically is, what would you recommend for a CIC if Tide and Monzo has refused to open a business account? Is there any sort of advice you can give there?
Okay, so I think with CICs, this is a different sort of entity. This is a community investment company. I think with these, you'll probably be steered more towards the traditional banks, because I think the digital ones may not cater for some of these. I think this is where they're not quite as as adept as the high street banks. They're not that established. But I mean, I personally have high street banks for my business, and for other businesses, I also use digital banks as well. For the main one, I have high street bank. Those, I mean, I'm not necessarily recommending, but I can say that I have Starling, which I think works very well. Starling Bank, Monzo also work very well, but there are so many. I know some who use Cash Plus, but most of these are just either for self-employed or limited companies. I think even with partnerships, sometimes they struggle a little bit, and so with CICs, they may also have because of the limited facility. But yeah, certainly Starling, Monzo, Revolut, these are all quite, well-known banks, and they're also regulated by the FCA as well. So your money is protected within these organizations as well. But I think for CICs, the traditional high street banks may be more suitable.
Okay, I'll merge the next two questions. It's more around sort of grants and loans. Is there anything sort of particularly that people should be looking out for, should be made aware of? And I guess the other question was around in the north, there seems to be local support. Some councils are offering Sharia-based financial support for businesses offering halal products. Um, whilst that isn't a question in itself, I suppose maybe just a bit of elaboration on that and understanding of some of the products that are available for support.
Yes, I mean, well, certainly as far as the halal, banking, halal finance, I think we've had a good session on that. So I think perhaps we can issue the recording of that one. The very first one we had was on halal finance and banking. So we can, refer back to that one. As far as the funding is concerned, I think we did cover one of those. Certainly, if you go onto again the government website, um, there is there's various banks which are I mean various loans available. I think if you go onto gov.uk business finance support, there you'll get access to quite a lot of grants specific to the region. There's the startup loans, the British Business Bank in particular. This is offering £25,000 per founder with mentoring support. But I must stress that whatever these loans and grants that you apply for, you must have a robust business plan. So it's important that your plans are in place. You've got to present the case to them, whether it's grant funding or whether it's bank funding. So you must, the business plan must be robust. I think that's the key thing. But I think the good starting point is from gov.uk business finance support. As mentioned before, Innovate UK is another one. This is more for tech innovation-based ideas, and obviously local enterprise partnerships. But there is a lot of information out there, a lot of funding available. But you just have to make sure that you have the right business plan to present in order to get the funding, whether it's loan or whether it's grants. And so again, I would say that do get in touch with professional advisors on this who can help prepare a lot of these. There are various software that can produce simple plans, but I think get it checked out before submitting.
Jazakallah. Uh, okay, we've just had another question come in, so we'll take that one. Um, what are the main conditions that a newly established business with no sales history should meet in order to get a startup loan? Is there any strategy or platform where you can present a business idea or product you wish to sell and receive mentoring guidance and feasibility assessment of the product? So the second part of that question I'll take because I was actually going to introduce an event. So it's nicely led on from that. But if you could cover maybe the first part of that question, I'll repeat it for yourself. What are the main conditions that a newly established business with no sales history should meet in order to get a startup loan?
Yeah, I'd come back to the business plan again, Shamsa. It's important that before you start it, you must have an idea. You can't just get a loan without having an idea and having some proper thought and process behind it. No one is going to lend just on the basis of an idea. There must be some cash flow forecasting in particular. You must have identified the market. You must have identified the product that you want to sell. Market research should have gone into it. So again, the business plan, this encompasses all of this. It's not just the figures. The figures are important, but you must demonstrate that you've done a lot of market research. And certainly from my experience, those that do get the funding and the loan, etc., they have spent a great deal of time, going into this and, properly researched the idea, and they've got, the full, package ready. So you don't have, so it's before you're starting the business, but the business plan is extremely important. And, without this, if you just go to a bank, say you want to do this and that, this is, then unfortunately, the chances of gaining finance like that is going to be difficult. So I think starting point is the business plan, certainly from experience we have over the years.
Jazakallah. Only due to time reasons, I think we'll close it. There are okay. Actually, this is we'll take this one as the last question. Can you please name any software or templates for business plans?
Yes, indeed. There are, I mean, as I said, there, a lot of them, they're Excel based. There are some which can be used for a business plan. We have something called life plan and B plans. These are they're sort of startup. They basically help. I mean, it's fairly straightforward. Life plan. I think I'll try and share that in the chat box. So just see. So it's life plan and business and B plans. They're fairly basic, but that might at least, that might at least help to get the ball going. In fact, are you able to put that in the chat box, Shamsa? So I'm just trying to access that. Or if someone can put that in, or we can share it afterwards if you like, if that's easier. But certainly life plan and B plans, these are some business helping just to, some business planning tools. And it just gives a structure of what to include, just gives samples, etc.
Exactly. No, I appreciate that. Thank you. And as I said, only due to time reasons, I think we'll close the questions there. But just to answer the second part of that question, where is there any sort of platform where, as a Jamaat, we can get together and present ideas or at least get some mentorship and guidance. This leads us on to a great event that the Sons of the Yard team has organized, which is for Saturday, 1st of November at Badr Futhur from 10 a.m. to 4 p.m. And this is a live in-person event open to all Khuddam, Lajna, and Ansar. It's a business and entrepreneurs connect sort of forum, an opportunity to network. There'll be one-to-one support sessions, business talks and guidance. And here you can, it's been added into the chat. So if everyone can please download that and keep that. And you'll hear from successful business owners, and they'll share sort of real world insights and networking opportunities. So you'll be able to build sort of valuable relationships, connections, and potential collaborators as well. So I would definitely recommend if everyone can take the time out to attend that. It goes in hand with our sort of larger plan to help collaborate, and connect with people. We are back next week as we continue our talks every Monday at 7 p.m. And next week we'll be discussing the introduction to Islamic investment and pensions. So please do join us again. And at that, I thank you again, Imtiaz Saab, and ask you to lead us in silent prayer.
Jazakallah. Please join me in silent prayers. Duakallah. Ameen.
Jazakallah.